Hello and welcome to TA for Traders. It's Tuesday the 19th of December. In this video we're going to look at the charts on the Aussie dollar against the Japanese yen, which on TradingView has the code AUD JPY. What we'll see is that sometimes in charts the longer term and the shorter term charts are telling you different stories. The longer term chart looks like we're going to have Aussie weakness, but the shorter term charts are more positive for the Aussie dollar, and if volumes increase we should break the resistance of the moving averages and move higher. Let's look at those charts. So here we are, as usual, looking at the weekly to start. So each candle represents 1 week's trade. And you can see that we've just gone back above the 50-week moving average, which is positive. The Aussie dollar has had a good 4-week period. That's taken it back above that moving average, which is actually still moving upwards. So is a positive factor and will give support. That's presently at 85.97. To the upside, however, you can see that the 20-week and the 200-week are tracking down, and that very much we're still in a downtrend formation. This pattern of lower highs and lower lows looks like it will continue. We do need to break above those resistance levels. The 20-week to start is at 86.96. Momentum wise, we were in a downtrend. That's now been broken on the RSI and it's gone back above 50.73. So a slight increase in upside momentum, although that's not really been shown in the MACD, which are the longer term still tracking down, and the shorter term is actually below zero, although that has started to move up. Keep your eye on those, particularly if the short term can move back above the longer term above zero. That could be a sign that the momentum has really shifted towards the Aussie dollar. On the daily picture, you can see that we're up against the downtrending 50-day moving average, and that's the immediate resistance. Will it be broken? Well, I'm a bit concerned that we've got this lack of volume. The volumes have declined over the last 2-3 days. Obviously, the lead up to Christmas, I guess. That needs to improve if we are to break through that resistance. The other moving averages are well down. The 200-day is another support level, 85.87, but that is still tracking down. The 20-day is now turned around and will move up towards the other moving averages shortly. Moving on to the 4-hour. And here you can see we're up to the resistance that was created a few days ago on the 14th. That's maybe creating a resistance level, a trading range upper boundary, so be aware of that. We do need to break through, and again that will need increased volume as the volumes have declined recently. Below there we've got the 20 on this 4-hour chart giving support, 86.24, and moving up. It did create a golden cross with the 50 as it moved up, but not with the 200, which is still moving down. Here on the short term there is good positive momentum. RSI 66.26 and the MAC are tracking sideways but are well above zero. Okay, looking at the support and resistance levels. We've got resistance from the 18th of December, 86.49, and then from the 20-week moving average, 86.96, with supports from the 50-week, 85.97, and then from the 200-day, 85.87. So that's been TA for Traders, looking at the Aussie dollar against the Japanese yen. The key takeaways from the video: Aussie dollar has some resistance, is up to resistance. Those moving averages are critical. We're up against the downtrend in 50-day, which needs to be broken. However, in the short term, there is good upside momentum, but the longer term picture not as rosy, as we're still in that downtrend on the weekly, and we do need increased volumes to break through those short term resistance levels. Many thanks for watching this video. If you're not a subscriber to my YouTube channel, please do subscribe. You then get email updates when I come out with further videos. I don't just only cover FX markets, I also cover commodities, equity indices, and I do videos as well on single stocks in the UK and the US. Please remember, these videos are for information and for educational purposes, and they're not an investment recommendation.